Welcome to another episode of the Lightspeed Investing Podcast. I'm so glad to have Stephen Orr back at it again. He is a renowned expert within the markets. His face is on the New York Times billboard. And good to have you here, Stephen, to go over your second 9 rules of trading that you have amassed over the years.
Yeah, thanks for having me again, Philip. Going through all my rules of trading, whenever I make a bad trade, I sometimes go back and I look at my different rules and say, oh, you know what? I broke that one. And I think the next 9 rules are very exciting because my top one here in the next 9, the very first one is have a thesis. And I think that's very important when you have any kind of trade. It doesn't matter what you're trading, whether it's futures or options or stocks or crypto. It's have a thesis. Why are you making this position? And when you look at that thesis, you have to look at it from the perspective of, is it a fundamental thesis? Is it a thesis based on news? Is it a thesis based on trading itself, how you trade? But always have a thesis, have a well-rounded idea of why you're making that trade, whether you're going long or short. Make sure you understand why. If you can't tell me in a one sentence why you're doing it, I don't care if you're even scalping or it's a long term or a swing trade, doesn't matter. You need to know why you're making that position. Why am I buying corn futures here? Why am I buying stock here? What's the point of why am I shorting here? There has to be a reason behind it. And if you can't tell yourself that reason, then you probably shouldn't be in that position.
Gotcha. And so, having a thesis or reasons to get in and out of certain trades is paramount to getting in, right? So what is your own thesis, Stephen, when you get in and out of trades?
You know what? For me, I have different reasons for any kind of position. A lot of times I look at the news or I will look at fundamentals. I think people ask me all the time about biotech stocks. I said, well, there's a complete reason of why I buy and sell biotech stocks. I understand it. I understand the biotech world. But I also know when to buy and I know how to get out. And I think that's part of having that thesis is understanding everything around it, right? Is that also knowing, okay, planting season, we just talked about this, is in March and April. That's a good time to make a decision then. And my thesis is over the summer, something this is going to happen. And this is what I'm thinking about getting out, or vice versa, right? Maybe it's a quick trade. It's just like maybe a scalp when you're in and out. But for me, thesis trading also includes your personality too, right? You need to understand yourself as you trade and what you're good at and what you're not good at. You go, okay, you know what? I'm very good at trading XYZ. I love trading, as you know, stocks. So when I'm trading those stocks, I need to know why and I need to know what I'm doing. Okay, let's say we're trading Nvidia. Great. And the reason I'm buying Nvidia is because of this news article and they're making this chipset and I'm looking in the future and I think the CEO can do it. And I think the money's coming in. I think China, all of a sudden I'm starting to build a bigger picture or a thesis around that position. And that's how I usually trade.
Okay, I love it. And have you found that your thesis has changed over time, or do you recommend maintaining the same thesis, even regardless of what the market's doing?
That's a very good question. If you're in a position and you're not really sure of it, right? I always have to ask myself, what was the original thesis? Why did I get in this position? What was the reasoning behind making this position? If it was because of a new chipset for NVIDIA and that chipset hasn't been built yet, that's a different thesis, right? All of a sudden, if my thesis starts to break down, then yeah, I'm going to get out of that position because my thesis, my thoughts, my belonging into this position has changed. And when that happens, I absolutely do not stay in a position. But if my thesis has staying the same, but yet maybe the news is a little different, I'm okay with staying in it because I had a reason to get into it in the first place, and I need to understand how to get out of that position, maybe down the road, or buying stops and that putting stops in and things of that nature. But I'll tell you, quite frankly, it's all about whether I believe in that position or not, and how I got to that position.
Gotcha. Okay, and so tying this in with your second rule presented here today, right? You want to really emphasize learning technical trading. What is the difference between technical trading and fundamental trading?
That's a great question. I mean, for me, Philip, I learned on graph paper and pen. Technical trading is very simple. It's the graphs that you see in front of you and how to overlay different technical analysis on top of it. The better known as indicators. There are thousands and thousands of indicators, everything from Bollinger Bands to Gann lines and Fibonacci sequence. It's not just overlaying things. It's also about looking at the future and time frames. Was it, are you on a 1 second chart, or are you on a daily chart, and seeing monthly moves and 200-day moving averages? When do you know when to apply those things? Because quite frankly, you might have the best indicator on that chart, but it's the wrong indicator at the wrong time. And that's always important. So when I say learn technical trading, it also means understanding every single indicator out there. Don't just learn 2 or 3 indicators and that's the indicators you always have. As I always say, if your charts look the exact same as it did 3 months ago, you're doing it wrong. Because why? The markets change. People think about different positions while they're in it. Today might be a 200-day moving average. Tomorrow it might be Bollinger Bands. The next day it may be linear regression that overtakes the market. But if you as a person understand every indicator out there, then you're going to be a much better trader. You're going to understand why that thing bounced off of that line and not that line. And the key to learning technical trading is not just knowing when to put that technical indicator on it, but understanding what others are putting on their charts. So if 1,000 people are putting on one indicator and one person's putting on one indicator, which may be better, they're probably wrong because you want to go with the psychology of it, right? They believe that this is where the buyers and sellers are. Now, there are a few indicators that I really like: Bollinger Band, linear regression. I think I just talked about that. And I love Fibonacci because I think that's where the different areas are. And I put a lot of Andrew's pitchfork on it too as well. The fan is always important to me. So, there are certain very basic ones that I think everybody should have on it, like volume and volume regression and things of that nature need to also be on the charts. But those are the very basics: 50-day moving average, 200-day moving averages. Those should already be on your charts. So that's the very bare basics. But I'm talking about when you get right into it and you start looking at other indicators like Elder's Force, which I use a lot, volume force I use a lot, right? It tells me how to apply that indicator when there's a lot of volume coming in. Elder's Force is very important. So all of a sudden you start to realize how to, when to, and when to take them off. It's very hard. But if you learn technical trading, you'll have a bigger advantage over people who just fundamentally trade. Now, when you fundamentally trade, that's when you look at the basics of the actual underlying equity. So if it's stocks, you're looking at PE ratios, you're looking at price to book. Is this stock undervalued? Is it overvalued? Is the futures, is that corn, is it being pulled up out of the ground yet? Is you're looking at the news a little bit. So fundamentals is also seasonal charts, right? When's a good time to buy? When's a good time to sell? So there's a big difference, right? So for me, but I trade mostly technical, but I believe in fundamentals as well. So if a person just trades based on price and just trades on charts, I don't think you get a very good, well-rounded basics of how to actually trade. There are a lot of people out there will argue with me. They'll say it's all about price and it's all about charts, or it's all about the news, or it's all about fundamentals. I don't think that's the case. I think it's a little bit of everything. But if you understand all of that, especially technical trading, you'll have a much better advantage. I know some great people out there that trade the VWAP, right? The volume weighted asset price. Those things really help when you really want to look at the market. So yeah, I believe technical trading is a key.
And for you, how did you get your start in navigating the overwhelming amount of indicators to pick which ones to pay attention to, which ones to keep, which ones to discard? I mean, what was your journey in learning technical trading, and how does one get started?
I think it goes right into my next rule. Listen, time is your best friend. Look, I don't expect everyone to learn everything about technical trading or fundamental trading in seconds and minutes and days. It's going to take months. I see people online all the time that they've been trading for 3 months and they're the masters of the universe when it comes to the markets. I promise you, you're not. There's no way you can learn that much kind of volume of information, right? There are indicators when I talk to people that they don't even know about it. You may have TradingView or you may have S&P Chart IQ. They have thousands of indicators on it. There's no way you can learn all those indicators, when to put them on. But guess what? it takes time. And if you are willing to put that time in, especially with you guys at Lightspeed, and put that time in with them and you guys, that's how a trader becomes better, right? That's exactly what we need to do. It's literally it's putting your time into it. And I'll tell you, here I am at 33 years later trading. I'll tell you, it's been a lifetime of learning. And even when I think I know most of the markets, there's other indicators coming on. There's even more things to learn. So you'll never stop learning in the markets. But it's okay to take a break. But to be honest with you, as I always say, time is your best friend. Which brings me into the rule of why time is your best friend. If a trade is going against you or for you, you have time. You can take the time to either get in or get out of that position. You have time saying, okay, my thesis isn't been worked out yet, but it will work out because my thesis isn't over yet. That's what I mean by time is your best friend. Make sure that when you are looking at that position and you go, okay, I think that this position is going to go X amount over 3 months. There's your time frame. But if it doesn't and the thesis changed, then that's different. If the thesis does not change, and you want to stay in that position, then time is your friend. You may want to turn around. I tell you all the time, I make a position, I'll go take my dog for a walk, and guess what? An extra 3 minutes of my walking is a good for my position. I walked away from it, and I didn't overtrade it. So yeah, I think that's the key to it is time.
Thank you so much for that take. And so basically, I think what you're getting at is time can be your best friend if you know how to use it right at the
That's
end of the
correct.
day.
Yeah.
If
I
you
mean, yeah, I mean, time is in everything, right? So it's time to learn, time to trade, time is your best friend because sometimes you don't know if you are making the right decision. If you're not making the right decision and you don't understand it, or you don't feel it, walk away from the trade. Don't get out of it, but put your positions on. Stop limits. Put your position on to know when you want to get out of the position. Start to build that out. And as you look at 200-day moving averages or moving averages, you go, okay, here's my time frame, and then I'll give it another month and then see if it follows that timeline and follows that moving average. And if it does, and then it finally gets to your position, you've used time to your advantage and not the other way around.
That's right. And I think this coincides really well with your next point, which is the emphasis of do not over trade, right?
Yeah.
Just because the button is there for you doesn't mean that you should be clicking it nonstop. Correct?
You're absolutely right. I think in gambling they call it tilting in a lot of ways. Look, do not overtrade. That is the key to a lot of the positions that a lot of people are in. You think if you're down one day, you should trade again to get back up to it. No, you still need to be disciplined. And what I mean by do not overtrade is if you lose in the morning, don't go buying again in the afternoon, hoping and praying that you'll win in the afternoon, unless that position is where you want to be. Thesis, right? But if it isn't, you might have a lot of positions on too as well. So you have thousands of positions on, and that's also over trading, right? Make sure you're not in a position where you're too heavy on margin, where the position is making you nervous, right? Or do not overtrade, meaning that you won in the morning. You did a really good trade in the morning, and by the afternoon, you're out of the position, and you go, I want to get back in because I can't wait to make more money. That's over trading because you've allowed your emotions to be the reason for their trading and not on your thesis and your calmness and making that decision in your mental faculties. You're literally in a position where you're trying to either win more or you're trying to get out of a hole. And those are two things you should not be using to trade. Those are literally the worst things. Those things that are against you. I also mean do not overtrade, meaning that if you're in, and we talked about this earlier, what am I trading right now? And I told you right now, I'm mostly trading stocks right now because I think the stock market's a lot easier to see than anything else. I'm not trading futures right now. I like futures usually in the spring and in the fall when I feel like there's more volume and it's working a little closer. Right now, options are very, very hot, but maybe too hot for me right now. So guess what? I know myself. It's part of it. And do not overtrade, meaning buying an option and buying futures and buying stock. Now you're overtrading. Now you're trying to buy everything. But I will tell everybody the same thing. Learn everything so you know when trade stocks and options and futures. They're all seasonal. So sometimes that even gives you an advantage, right? So, for example, buying corn in the spring and selling corn in the fall, just like a farmer, and the farmer has a drought, guess what? The price is going to go up, and you're ahead of the game. You're already part of that, right? Because you're seeing things you didn't. But if I'm trading stocks and trading futures and trading options and doing it all at the same time, sometimes it's over trading, and you get lost in the actual the way of how you trade too, as well.
Hmm. And that's so funny because, we're talking about not over trading as a rule. And you would think that, okay, so there's got to be some minimum activity, right, in order for one to be considered a productive trader, which leads us to our next point, and that is you consider sitting on a trade, right, is a trade itself.
That's right. I can't tell you how many traders that I know are itching to put a position on every single day. And I'll tell you something, I have learned the best way to trade is by sitting on your hands sometimes, meaning that's an old statement from old traders back in the day. That's an adage.
Mhm.
By sitting on your hands, meaning you don't want to trade at all. You want to, you can't stand it. But when you sit on your hands, it means that it's keeping you from doing it. I can't tell you, Philip, how many days I have spent sometimes where I don't even make a position, a trade at all. Because when I trade big. I'm not going to lie about it. I have big positions. But when I do that,
Mhm.
I make sure that I understand why I'm doing it. And I'm not just trading to just trade because I've got to do something. That's a gambling addiction, right? And we don't have addictions here. What we have in the markets are we're fundamentally or technically or we're inclined, we have an advantage over another position or a trader. That's when you know to trade. When you're in a position that you go, I just have to trade because I have to do it, man, you're going to lose almost every time. That is a key to trading. Stick on your if you feel like you have to do it and you know you shouldn't do it, sit on your hands. It kind of works sometimes. It makes you go, you know what? You're absolutely right. It relaxes you calm, or you can go for a walk or whatever. It's turn off. There are times when I turn off my machines and say, I'm not going to trade today, right? I want to reset my mind, or I don't want to trade because it's too volatile today. This is not a place for me to be in. I'm okay with that. And even when things are really volatile, I liked volatility. I love volume. That's part of why we trade, right? We know where the positions are going, especially when there's no volume to volume, and that's even better, especially when we know we're in the right position. But sometimes you just have to kind of walk away and say, I'm not going to do this today. I'm not going to be in a bad position today. Because I'll tell you, 9 times out of 10, you usually lose when you do it. When you trade, when you really shouldn't be, or not in the best position or whatever. But it is an actual trade because you know what? You didn't win or you didn't lose. And losing is a bad trade. Winning is a good trade. But when you break even, okay, it's still a trade. I still bought, I still sold, but I broke even. But guess what? That's going to put you at 2 to 3 chances of being okay, right? There's only 3 things you can do, right? Make money, lose money, or break even. So if you break even and you make money, that helps you become a better trader. You're going to make more money. It limits
That's
your
right. And
losses.
that's right. And speaking of making money, your next rule here is it's good to make money, but don't be too greedy, right? Take your
Mhm.
profits when you see them there for you, right? So you want to elaborate a little bit on that principle?
Yeah, don't be greedy is very, very simple. A lot of times people go, gosh, I just made X amount of money. I could make even more money if I just waited this out. No.
Mhm.
What I mean by have a thesis is also meaning know how much money you want to take out of the position. I bought this for two points. Here we go, and this is what I bought it for. That's part of my thesis. I know what I'm looking for to take in profit. Sometimes taking a profit before my thesis is up is okay too. If there is money on the table and it's good money, take that money, stick it in your pocket, and go learn to play the next day. So often, traders get very greedy, thinking they're going to make even more money, and they'll double down their position, they'll triple down on the position, and next thing you know, they're getting slaughtered. Pigs and hogs, right? We want to make sure that we just don't get slaughtered in a position, and doing that, meaning that if you're up a third or a half of what you wanted to make, and you're feeling pretty good about that, take that money and run. It's okay. Stick that money in your pocket and reposition. There's 9,000 stocks and how many positions and options, and it's almost innumerable, and the number of futures prices out there. There's always something somewhere. So don't worry about it. We'll find something else to trade. That's why I always say take a profit. I mean, very often I go, gosh, I got out of that position too soon, or I made a mistake because I sold too soon. And guess what? And usually 5 minutes later, the stock's down. Good example, that was CrowdStrike today, CRWD. I made some money on my thesis, and I took my profit and ran. And guess what? The stock went against everybody else. I took my profit and didn't get hurt. And sometimes that also means, when I say don't be greedy, is putting in stop losses where the trailing stops. Meaning that if you're in a position, you've made some money, put a trailing stop in there, because as it goes up or goes for you, that also, if it falls below that, then good, you're out and you still made money. Meaning don't be greedy. So protect that profit too also.
Yeah, absolutely. And that coincides with your next rule, right, of setting a daily goal so that you have clear numbers and targets to hit. So for you, you know, if you don't mind me asking, what is your daily goal, and what do you recommend the daily goals for someone in different phases, whether you are a novice and beginner, someone who's more intermediate, and someone who's able to trick big position? You know, what do you have to say about these different demographics?
That's a very good question. When I say set a daily goal, it does mean set a daily goal. But how do I get to the daily goal? How do I know what I need to do to make what I need to make every single day? That's correct. So what I always tell people is, I want you to look at yourself and think about how much money you're making now. Do you want this to be a place where it replaces the job that you're in? Do you want to make trading a full time? Or is this advantage of giving you a little bit more money so that you have a little more money for college education for the kids, or to being able to go out and have nicer dinners? What is it that you want to do with the money? Once you've realized that, once you set that goal for yourself and how you want to supplicate your money. Let's say it is that you want to make yourself a full-time trader. All right. So let's say you want to make X amount of money a year. Let's say your goal is 100,000 a year. Your goal is now 200,000 or a $500,000. It doesn't matter what that goal is, because every person is different, right? But if you say to me, okay, Steve, my goal for this year is 300,000. Great. There are 270 trading days in the year. We know that. So, all right. Now you need to divide it by those days, by the month, by the week, by the day. That's how you get to it. So you can't set a daily goal until you know what your yearly goal is first. All right. Set your yearly goal first, and then divide that by 12, and then divide that by 30, because then you'll know exactly what you need to make daily wise. Now, does that mean that if I don't hit my goal every day that I'm messed up? Absolutely not. In fact, the opposite. If you don't make your goal, that does not mean you double down and overtrade. It just means you have a goal. Some days you'll blow past that goal like it wasn't even sitting there. Some days you'll be like, oh, well, I kind of just got to my goal. And other days you're like, oh my God, I lost today so much that I blew my goal for the month. That's okay. It's okay. Then what's not okay is stopping trading. You must, once you get into it, you just can't stop. You always must, because you got to learn. So once you've got your yearly goal, your monthly goal, your weekly goal, and now your daily goal, now you know what you need to do in order to move forward. But even if you lose the one day, do not double it down for the next day. Just continue to shoot for that goal every single day. If you need to, and I do it every once in a while, I have little sticky notes saying, today, Steve, your goal is XYZ. Your goal for this is here. Are you there? Keep a running tab. Find out if you are getting close to your goal. And if you're not, then understand how to trade. But make sure you set those goals, and don't put goals that are so lofty out there that you can't hit them, or so low that you can make them and it makes you feel good. Try to figure out what you want that goal to be.
And so for you, you know, when you tell people these things, do you recommend them practicing on a simulated environment first? You know,
No.
so that
I can tell you that right now. Paper trading or trading on a computer and without there is, listen, the world of trading for paper trading is great if you're needing to learn how to make the trade. In other words, how to put the trade on, how to put the order in, whether it's to buy and then buy market, or buy it by limit orders, or buy it, how to make the actual trades. I agree. Paper trading is fantastic for that. But if you want to learn to actually trade, paper trading is literally the worst thing to do because it doesn't teach you a couple of things. It doesn't teach you how to be an actual trader because what your positions are with real money and what your positions are with fake money. I can play with Monopoly money all day long. And guess what? Win or lose, there's not that internal that says, okay, Steve, this is a good trade. This is a bad trade. All of the things that work a whole lot better when you actually put your money to work, when you have real positions on. When you don't have real positions on, you don't get the same feeling inside of you going, okay, this is what I should be doing. These are the roles. You're not, your mind isn't set the same way when you're paper trading. When you got your real money in it, that's a different ball of wax, or as a lot of my friends call it, it's a different animal when you have your money in there. But no, I think paper trading is a waste if you're just learning to do this for yourself.
Gotcha. Gotcha. Which leads us to the final rule, right? In terms of diversifying your portfolio, options are not as scary as people think. Now, are you talking about options, like options in general, or are you talking about the asset class stock options?
The asset class options. I think a lot of times people go to me and say, I want to learn options, but I don't really know what to do. They're very scary. And I break options down for people so that they understand. So when I tell people options aren't scary, it just means to say that learning a new asset class is not a big deal. You can learn it. If you want to learn futures, if you want to learn whatever it is you want to learn, they're not scary. But a lot of people feel like options are the hardest thing to learn. And so if you can learn, as I always was told, if you learn futures and options, you can learn anything because there's a lot of things behind it, right? So when I say options, I always say, look, the very basics of options is it's 100 shares of something, right? You're just multiplying it, and the time frames, meaning theta and vega volume. So you have to be mindful of a few other things around options. But other than that, it's not that scary. Actually, you'll learn to trade options. But a lot of people just get crazy with options. They'll buy zero DTEs and buy lots of them and not really understand it. So I always tell people the same thing. They're not scary, but understand what you're actually investing in. If you do not know all the things around it that you're investing in, I always ask people all the time, well, why did you buy that option? I don't know. It was just what I saw on TV or I saw it on Twitter. That could be probably that's a recipe for disaster. So just like technical trading or just like everything else, you need to learn it, right? You need to understand what you're actually investing in and why you're investing in it, the thesis side of things. So when I say options, a lot of people don't understand that, and at the end of that contract, it goes to zero. It literally goes to zero. In futures, right? You either it's a carryover to the next month, or you change it over, or you exercise it. You actually get the contract, you get the oil, you get the pigs if you want them. And options, you can exercise them, and most people don't even know that. So I think when I say options aren't scary, it's to also say, hey, you can trade it, you can learn it, and learn by companies like yourself, especially in the futures market. Lightspeed investing, you guys are great at that and teaching people how to learn and invest and do it the right way. And I think it's the key to a lot of times when we're investing is learning from the right people, right? When I say options aren't scary, it also means don't learn it from just somebody on YouTube that think they have a YouTube channel. I'm telling you to go learn it from people like yourselves and myself who have been doing it a long time. That's important.
And for you, do you prefer, day trading options versus swing trading? Like, what is your favorite way of going about these markets?
Oh, that's a good point. Yeah. So when I'm asked that question all the time, it literally depends on what I'm doing. If I have a large amount of shares and I need to do what options were actually meant for is hedging and protecting that position, yes, I'll buy options against that position. If I also think that position is bullish and I buy a lot of calls, yeah, I mean that's because it's my thesis. And you know what? I can lever up with using the option. And also the options, maybe I do want to buy the stock down the road, but I don't know if I want to do it just yet. Or I don't think the market's going to move very much, so I'm going to put a straddle or a strangle on. There's a lot of options, positions where you can put on that are not just as naked calls and puts. So there's a lot more to options than that, but you can do it. You can learn it.
I love it. I love it. So, Stephen, that is our time today. And to conclude this second 9 rules of trading, do you have any parting words, comments, and final wisdom points for the audience listening in?
Yeah, I think that as we trade in our trading lives, and as we learn and continue to grow in our trading, that I call the trading journey. The one thing that I've always said that is the most important thing in trading is that don't let it get to you. It is not the end all be all in life. It is something that helps, either that manifests that money for you, makes you the money, but it does not need to become your life. And sometimes people allow it to become their life. And if you learned how to trade, you learn from places like yourself that are professionals and keep people out of trouble. I think that's probably the key to anything in life, right? If you want to be a doctor, ask a doctor, right? If you want to be a trader, talk to those people who have been trading a long time and professionals like yourselves at Lightspeed.
Love it. Thank you so much for those words. And I look forward to finishing up on our next episode with your final 9 rules of trading. Thanks so much, Stephen. You have a good day.
Thanks, Phil.